Yeah, Sarah. So individual investors are still willing to step in to that volatility you talked about and buy the dip at this point. Retail activity broke records last week. The buying remains right now what Vanda Research at least calls robust. As JP Morgan put it, this week investors have been willing to place confidence on the market upside despite radical policy uncertainty. That did pay off at least on Wednesday with some of that tariff relief. Also, that post by President Trump with saying this is a great time to buy. At the close of that day, average retail portfolios were up 17%. That's according to JP Morgan. S&P at that same time had the biggest one-day gains since '08. Much of that, of course, has reversed. And as of the close on Wednesday, retail investors did start to lock in some of the gains that they've seen, selling single stocks and then buying the dip. Kind of just moved to ETFs. Vanda Research says that does suggest some longer-term broad bets on equities. Vanguard's S&P ETF is right now among some of the top traded names. And then if you look at where the money is going right now, it is mostly NVIDIA, consistently the most actively traded stock. Of the $3.5 billion that went into single stocks for one day this week, $3 billion of that, to put it in context, went into NVIDIA alone. So other retail favorites like Tesla, it's been a little bit more mixed on the sentiment. There has been some hedging. Seen the SQQQ jump. The YOLO trading crowd, as we talked about yesterday, though, still alive and well. There's a risky leveraged Tesla ETF and then one that gives you double exposure to the NASDAQ 100. Those are still among the most actively traded names, guys, at least on Fidelity. David, back to you.
Wow. Yeah, those are day trades, a lot of them, I would guess.
Yeah.
Kate, thank you.